All right, so the last 24 hours have been very eventful if you're an investor. We've seen Ethereum surpass $2,000 per coin, Bitcoin break $30,000 per coin, and if you're just in the stock market, well, we've seen inflation continue to drop, continue to cool down, new unemployment reports come out, and things are looking good all across the board. So today's video, I want to address important things going on in the overall economy first, touch on what's going on with crypto, and address some things going on in the tech world as well. We're going to try and keep this video pretty short, so make sure to stick around until the end. And if you enjoy this content, I'd appreciate it if you like the video, subscribe to the channel. So starting off with the overall economy, what we've seen is that new CPI data came out over the last few days for the month of March. And in this report, it showed that U.S. inflation dropped down to 5%, which was below expectations of 5.1%. This was the first sign out of a couple that was a great signal if you're an investor, because it's showing us that everything the Federal Reserve has done over the last few months, continually raising rates, is working, and we're finally starting to see the effects on the economy. We're seeing it slow, which is exactly what you want if you're an investor. We want to see the Federal Reserve potentially stop raising rates, which we'll address in a minute. The second thing that happened is that we also saw jobless claims. The jobless claims for last week increased to 239,000. This is the first time in about 3 or 4 weeks that we have seen an increase, and this is a good sign, again, if you're an investor, because it shows us that the labor market is cooling down. It's slowing down, and there's not just unlimited jobs out there with unlimited raises, and things are finally starting to catch up to what has been going on in the economy with the job market. So that is the second good thing. Both of these signs and data points show us that the economy is slowing down, which is what you want to see on the interest rate side. And this brings us to what is happening with the Federal Reserve. When you're looking at the Federal Reserve, many are still predicting that we're going to see a rate hike in the next meeting of May, but just a slight one. And we've seen the odds continually get more and more of our favor of even seeing no rate increases. So over the last few days, when we've seen these new unemployment reports come out, when we've seen CPI data for the month of March come out, we've continually seen that this percentage right here, the keeping rates the same, not raising rates in the next meeting, we've continually seen this rise as we've seen a 25 basis point rate hike drop. Ultimately, what this means is that the next meeting, right now, it's looking very likely that we will still see a 25 basis point rate hike, but things are looking much better that the Federal Reserve is not going to be raising rates that much longer. If they do in the next meeting, it looks like that is going to be the last rate hike for a while, if for the next few years. So we'll see what happens there, but right now, if you're an investor on the overall macroeconomic front, things are looking good. Inflation coming down, Federal Reserve rate hikes look like they're coming to an end, and all the data is confirming this. So now let's switch gears a bit and talk about QMALL. For those of you who don't know, it is one of our long-term channel partners, and it's where I do most of my leverage crypto trading. It's a Ukrainian crypto exchange that offers a number of different altcoins to trade. And recently they announced a major partnership with rtfight.io, which is the world's only blockchain platform for boxing. This is pretty cool if you're in the sports or in the blockchain space, because Ready to Fight is an ecosystem that unites everyone involved in the boxing industry into one network. And from this partnership with QMALL, you're going to have the opportunity to earn money doing what you love. So RTF is the tokenization of boxing using an ecosystem based on its very own blockchain. And the way it works is there's a few different components. The first is for athletes. Athletes are going to receive startup capital of 1 million registered tokens in the Ready to Fight network. They can assemble a powerful team, spar with champions, and you receive cryptocurrency fees and fan donations. The second is if you're a fan. Fans, they have access to exclusive content. You could support your favorite boxer and can receive passive income through tokenization. Third is for investors. You're able to monetize athlete success and income from the development of the ecosystem. And fourth is partners. So like agents, coaches, sparring partners, rehabilitation centers, and any other people in the boxing community. They're open up to an entire new way to sell goods and services and make additional money. So if you're interested in boxing and how crypto and blockchain technology is integrating into the sport, I think it's worth checking out. Also, if you don't already trade on QMALL, also worth checking that out as well, because like I said, that is where I do most of my leverage crypto trading. Next thing I wanted to go over is what's been going on with crypto. You're changing gears a bit, looking at the crypto market. There's a few things happening there that we need to talk about. First of which is going to be with the overall Bitcoin dominance. When you're looking at overall crypto market, what a lot of people typically talk about is Bitcoin dominance. That's the percent of Bitcoin's market cap versus the overall cryptocurrency market's market cap. And what we've seen is that over the last 3 months, it has consistently increased from around 40% to over 48% at its high. This is usually what we see during bear markets, as we see people go from higher risk assets like altcoins back into Bitcoin during bear markets. So that's what we have seen. That's why we've seen Bitcoin dominance increase. Now we have finally started to see in the last 48 hours, ever since Bitcoin broke above $30,000 per coin, we finally started to see this shift where Bitcoin dominance went from a high of around 48%, now is in the 46% range, which is a massive decrease over a 24 to 48 hour period. A lot of this has to do with what's been going on with Ethereum, but either way, this could be the signal that we're finally seeing altcoin season start, that we're going to finally see a shift of money from Bitcoin into higher risk assets, and that is where we can make some real money as crypto investors, because altcoins are usually where we see the most returns. It's high risk, high reward, but now that we're finally starting to see Bitcoin dominance drop, that's a good sign that altcoin season is finally beginning, or it's just about to begin. When you're looking at Ethereum, there was a lot of excitement there as well. Ethereum, the number 2 ranked crypto by market cap, recently broke through $2,000 per coin and reached an 8-month high. It was a new high for 2023. What we've seen is that this had a lot to do with something called the Shapella upgrade. Ultimately, what this upgrade did, in the easiest, most simple terms, is it allowed users and validators to go ahead and finally withdraw their staked ETH on the network. So over the last few years, a lot of people had been staking their ETH, waiting for the ETH 2.0 upgrade, but they weren't able to do anything with this. There was over $34 billion staked in Ethereum, and that was just sitting there. Couldn't be withdrawn, couldn't have been sold, nothing could have happened with it. But now with this recent Shapella upgrade, which happened in the last 24 hours, we have seen that now people can start withdrawing it. So there's a few things I want to touch on with this, because first of which is that there was a lot of FUD that we were going to see massive sell-off in Ethereum's price after this upgrade, because this $34 billion, which was staked, finally was going to be unlocked and everyone could sell it. But that's not the case. So even if you still see FUD floating around that we're going to see a massive sell-off, that it still can happen, I don't think this is the case at all, because when you're looking at the data, the thing is, the number one best indicator and reason why I don't think we're going to see a massive sell-off in Ethereum is because the average price of Ethereum that was staked over the last few years, that $34 billion, all that Ethereum, the average price of that was $3,419 per ETH. Ultimately meaning that everyone who had staked their Ethereum over the last few years got it at a much higher price, and if they've been holding it for these last few years, it's been staked, they probably are not going to sell it anytime soon because they're in it for the long term. Why would they sell it at $2,000 per coin, $1,900 per coin when they bought it at $3,400? It's not like they're trying to make a quick profit. They've been in Ethereum now for at least a year, probably 2 or 3 years, so it doesn't look like that. In addition to just seeing that their average cost was $3,400, we also are seeing that they have been withdrawing some Ethereum, but they're only withdrawing on average 2.8 to 3.2 Ethereum, indicating that a majority of the validators are only withdrawing their staking rewards. So they're not withdrawing 20, 30, 40 Ethereum. Vast majority of validators are simply withdrawing a small amount of ETH, which is probably their staking rewards, meaning that everything they put in there, they're probably just going to leave. They're not going to sell any of that, but their staking rewards, the rewards they got for staking their Ethereum long term, they're like, okay, we'll take a little bit of profit, we'll sell that. So that's why I don't think any of this FUD regarding Ethereum having a massive drop-off or a sell-off is going to happen for those two reasons. Last few things I want to go over is going to be what's been going on in the tech space and with Warren Buffett. Recently, Warren Buffett said that we're not through with bank failures just yet. He said that ultimately right now, he has sold off vast majority of his bank stocks from JP Morgan to Goldman Sachs, Wells Fargo, PNC Financial, US Bancorp, and BNY Mellon. He says he sold off these positions because of the issues he's seen in the banking space. He said that while it didn't hurt any depositors, this could still be bad for banks, whether we're talking smaller regional banks or large banks. He expects there's going to be more bank failures over the coming year and next 2 years, and he doesn't want to be in these stocks anymore. So while this might not have a direct impact on your money, your deposits in banks, everything's probably going to be safe, especially with everything that the FDIC is doing. But the thing to keep in mind is that if bank stocks collapse, if we see issues with banks, we could have another issue like we saw last month, where the stock market collapsed on a single day. We saw that crypto had a massive drop off during a single day, and we're going to need the federal government step in. So this is something that adds a little bit of uncertainty to the economy over the coming months, potentially even year or two. So keep an eye out on that. And last thing I do want to touch on is what's going on with Twitter. Twitter recently partnered with Etoro, and it's allowing users to now trade stocks and crypto directly from the app. Ultimately, what they said is that with this partnership, Twitter is expanding its feature called cash tags. Ultimately, if you put like a $ next to a ticker symbol, whether that's crypto or for stocks, you're usually able to see charts, but now they've expanded this feature. So not only can you see charts, but you can click on a button that says view on Etoro, which takes you directly to Etoro's website. You can buy a vast majority of crypto, a lot of different stocks, and it is expanding Twitter from just being able to view charts for financial products and financial companies to now being able to make Twitter more of a news platform that also allows you to utilize this news if you're an investor. So just something to keep an eye on over the coming days and coming months. If you're an investor, keep an eye out on what's going on with the overall economy, a few things going on with Ethereum and Bitcoin, and altcoin season, because I'm expecting major things for altcoins now that we're finally seeing Bitcoin dominance drop.